Welcome back to the deep dive. Today, we're taking a closer look at a giant in global healthcare, Merck & Co., Inc. You probably know them for some of their breakthrough medicines, maybe Keytruda rings a bell. But what does their latest 2024 annual report, the 10K, really tell us? It's a huge industry, constantly evolving, so understanding a major player like Merck is key. Our mission today, as always, is to cut through the corporate speak and the massive amounts of data. We want to pull out the most important bits, the insights, give you a shortcut to being genuinely well-informed about them. So we'll elaborate on their business segments, break down the key financials, look at how they create shareholder value, and sort of assess where they're heading, understanding the why behind their moves.
Exactly. It's a fascinating look, really, at how that cutting-edge innovation meets, well, market reality, and how a company this big handles both the science and the significant global pressures.
So let's start with the structure. How does a company of Merck's scale even organize itself?
Well, it basically boils down to two core pillars. They operate mainly on a product basis through two main segments: pharmaceutical, which is human health, and then animal health.
A dual approach then, human medicines and, well, everything else animal related.
Pretty much. The pharmaceutical segment is, as you'd expect, focused squarely on human health. Prescription drugs, biologics, those complex drugs made from living sources, and lots of vaccines. And they sell these through the usual channels: drug wholesalers, retailers, hospitals, governments, managed care providers. It's a really complex global network.
Right. And within pharma, oncology seems huge for them. Keytruda, that immunotherapy drug,
Wow.
it just keeps growing, doesn't it?
Oh, absolutely. It's an anti-PD-1 therapy, helps the immune system fight cancer, and the growth is incredible. In 2024 alone, over 25 new regulatory approvals.
Wow.
Yeah, for expanded uses across more than 30 cancer types. New combinations for things like biliary tract cancer, cervical cancer, non-small cell lung cancer, or NSCLC.
Keeping a blockbuster like that expanding must be a constant challenge. What does that tell us about its long-term potential? Is it just one drug?
Well, that expansion is critical. It shows the drug's versatility, its continued impact. It's almost like a platform, not just a single product. And what's interesting is how they're also building out other oncology assets like WheelieReg. Its sales more than doubled in 2024.
Doubled. Okay.
Yeah, driven by U.S. demand for its kidney cancer use, plus recent approvals in China and a conditional one in the EU. It shows they're diversifying within oncology, which is smart, de-risking a bit.
Makes sense. And it's not just oncology, right? They have that hospital acute care side, too. Things like Bridion, Previmis, Difficid, maybe
Yeah,
not household names.
exactly. They might not grab the headlines, but products like Bridion for reversing anesthesia effects or Previmis for preventing infections after transplants, Difficid for C. diff, they provide a really vital, stable revenue stream.
Sort of balances out the high-risk innovation elsewhere.
Precisely. It's a shrewd diversification strategy within the pharma segment itself. And speaking of diversification, the vaccines portfolio is also key.
Gardasil, the HPV vaccine, that's a big one.
Huge. Gardasil and Gardasil 9, vital for preventing HPV-related cancers.
Yeah.
But the sales trend here is, well, it's complex.
How so?
Well, they saw strong growth in places like Japan. They had a national catch-up program, and the U.S. due to public sector buying and higher prices. But worldwide sales actually declined 3% in 2024,
Declined. Why?
primarily lower demand in China. It seems shipments to their distributor there dropped off significantly mid-year, leading to high inventory levels.
Ah, China. That complicates things. And they're actually pausing shipments there.
Yes, that's a big move. They decided to temporarily pause shipments to China starting February 2025, running through at least mid-year. They expect a significant sales drop for Gardasil there in 2025 because of it. It really highlights how global market dynamics, inventory, distributor relationships, how they can hit even successful products hard.
Definitely a situation to watch. But despite that, they did have some new launches in 2024.
They did. Winrevair, that's a breakthrough for pulmonary arterial hypertension, a serious lung condition. FDA approved it in March, EU in August, and it's already launched in Germany.
And the new pneumococcal vaccine, Capvaxive.
Right, FDA approved in June. Already brought in $97 million in sales in 2024. A pretty promising start for a new vaccine.
Okay, so a lot happening in pharma, but let's not forget the other pillar, animal health. It's easy to overlook, but it sounds quite significant.
It really is. It covers veterinary drugs, vaccines, health management solutions, even digital tech for tracking and monitoring animals. both livestock and companion animals.
So everything from farm antibiotics to pet flea treatments.
Exactly. Things like Nuflor and Bovalis for cattle, Bravecto for dogs and cats, it's a big seller, Novivac vaccines for pets, and even high-tech stuff like their Allflex livestock intelligence systems for monitoring herds.
It's surprisingly broad, really covers the whole spectrum of animal care and production.
It does. It shows Merck's reach goes well beyond just human medicine.
Okay, so those are the two big segments. How does Merck actually plan for growth? What's their strategy, especially with all the challenges out there?
Their R&D strategy is pretty focused. They prioritize drug candidates that offer, and this is their phrase, unambiguous promotable advantages for patients and payers. Meaning, they want drugs that aren't just slightly better, but clearly better, offering real value that healthcare systems are willing to pay for. They also work hard to maximize the value of drugs they already have approved, finding new uses, new formulations, and crucially, a big part of their pipeline comes from outside. Acquisitions, licensing deals, partnerships, they actively look for external innovation.
That makes sense, spreading the risk and opportunity. What's currently exciting in their pipeline?
Well, one to watch is MK1654, or clesrovimab. It's a long-acting antibody aimed at preventing RSV in infants. The FDA accepted it for review, and a decision is expected by June 10th, 2025. That's the PDUFA date. It's also under review in the EU.
RSV in infants, that's a big area of need.
Definitely. And of course, Keytruda development continues. They're testing it in over 30 cancer types, many trials in phase 3.
But drug development isn't always smooth sailing. 2024 saw some significant setbacks too, didn't it? Really hitting home how tough this business is.
That's a really crucial point. These weren't minor issues. We're talking about late-stage trial discontinuations for some very promising immuno-oncology candidates.
Like what?
Well, Merck had to stop multiple phase 3 trials. Keyvibe 003 and Nanico 007, testing an anti-TIGIT antibody, MK7684A, with Keytruda in lung cancer. They were stopped for futility.
Futility meaning they just weren't likely to work better than existing options.
Exactly. The independent monitors looked at the data and said it's unlikely to meet the goals, specifically overall survival. They also discontinued other vibostolimab studies based on that data and the fazelimab program, an anti-LAG3 antibody.
So multiple potential blockbusters hitting roadblocks.
Right. And MK2060 won't go to phase 3 based on phase 2 results. And MK8189 for schizophrenia didn't meet its main goal in phase 2B, so they stopped development for that, though they might explore other uses. It really underscores the huge risks involved. You invest billions, years of work, and it can still fall short late in the game.
A stark reminder. Beyond the pipeline, what about external pressures? Competition, pricing? How are government policies shaping things?
Oh, immensely. Competition is fierce, obviously. Other big pharmas, smaller biotechs, generics, biosimilars. It's constant pressure. But the regulatory and pricing side, particularly in the U.S., is a massive factor right now.
The Inflation Reduction Act, the IRA.
That's the big one. For the first time, Medicare can negotiate prices on certain high-cost drugs, and Merck products are right in the crosshairs. Januvia, their big diabetes drug, was selected for price setting back in 2023, with the new price kicking in January 1st, 2026.
And more followed?
Yep. In January 2025, Janumet and Janumet XR, related diabetes drugs, were also selected. Their prices become effective January 1st, 2027.
Okay, so the diabetes franchise is facing significant price cuts. But the elephant in the room must be Keytruda.
Absolutely. It's expected to be selected for price setting in 2026. If that happens, the negotiated price would take effect January 1st, 2028. Merck explicitly states they anticipate a U.S. sales decline for Keytruda after that. Given it's their biggest drug by far, that's huge.
A massive future headwind they need to plan for?
No question. And it's not just negotiation. The IRA also eliminated the Medicaid rebate cap in January 2024. That actually resulted in Merck paying more in rebates than they received in net sales for the Januvia family in 2024.
Wow, literally losing money on sales in that channel due to rebates.
It adds up. Interestingly, on the patent side for Januvia, even though the main compound patent expired in early 2023, they have settlement agreements related to another patent that push out generic entry in the U.S. Januvia and Janumet exclusivity is expected until May 2026, Janumet XR until July 2026.
So a bit more runway, but the IRA cliff is still there.
Exactly. The combination means significant sales declines are still anticipated for those drugs.
So government pricing can really reshape a product's future, even with patent protection. And circling back to China again, beyond the Gardasil issue, you mentioned an anti-corruption campaign.
Yes, that seems to be increasing the administrative burden on hospitals and healthcare institutions, which can indirectly affect operations. Plus, general geopolitical tensions are always a risk factor for a company with major operations, research, and manufacturing there.
Lots of global complexity. What about things like data privacy?
That's another growing challenge. Evolving laws globally, like GDPR in Europe, impose strict rules and potentially massive fines, up to 4% of global revenue. And there's still some uncertainty around data transfers between the EU and US. Even with the new framework in place, it's constantly being reviewed legally.
And environmental concerns, climate change.
They explicitly list climate change as a business risk, both physical risks, like extreme weather hitting facilities or supply chains, and transition risks, like new regulations increasing costs.
Interesting they call it out so directly. What are they doing?
They say they're integrating it into planning, investing in reducing energy, water use, emissions. They even have specific internal playbooks for things like a low-carbon transition, waste diversion, water conservation. They estimate about $41 million in environmental liabilities at the end of 2024.
Okay. And cybersecurity. Always a risk for big companies.
A huge one. They rely heavily on complex IT systems, cloud services, making them a constant target. A successful attack could seriously disrupt global operations.
And one more internal factor, that restructuring program you mentioned.
Right. Approved in January 2024, it's focused on optimizing their global manufacturing network for both human and animal health. It's a big deal.
How big?
Estimated cost is around $4 billion in pre-tax charges through 2031, quite a bit of which is non-cash, like asset write-downs. But the goal is significant annual savings, roughly $750 million cumulative net savings by the end of 2031.
So a major investment now for long-term efficiency gains later.
That's the plan, a clear move to streamline operations for the future.
Okay, that's a lot of context: segment, strategy, challenges, restructuring. Given all that, how did the financials actually stack up in 2024? How did they perform?
Overall, pretty strong, especially the top-line sales. Worldwide sales hit $64.2 billion. That's up 7% from 2023.
Solid growth.
Yeah, and if you strip out the negative impact of foreign exchange, the Argentine peso devaluation was a big factor there. The growth was actually 10%.
Even better, how did that break down geographically?
U.S. sales were particularly strong, up 13% to $32.3 billion. Driven by Keytruda, the new launch Winrevair, Gardasil 9 did well in the U.S., Welireg 2. International sales grew 1%, but 6% if you exclude the currency effects. They now make up exactly half 50% of total sales. Key drivers there were Keytruda, Vaxneuvance, Prevymis, and Animal Health, though offset partly by declines in Gardasil, Ligivrio, and the Januvia family internationally.
Okay, solid sales growth, but net income that saw a really dramatic swing from 2023, right? What happened there?
Yes, that's the really eye-catching number. Net income was $17.1 billion in 2024. Compare that to just $377 million in 2023, a massive increase.
Whoa, what caused such a huge jump? Was it purely sales?
Not entirely. Strong sales growth definitely helped, but there were some other major factors driving that swing. A big piece was significantly lower charges in 2024, related to collaborations, licensing deals, and acquiring research assets before they were approved. Those charges were still substantial in 2024, about $3.5 billion, but they were way down from the massive $11.4 billion hit they took for similar things in 2023.
So less acquisition-related spending hitting the income statement.
Exactly. Plus, they had a positive impact from a $519 million reduction in reserves for uncertain tax positions, basically because the time limit ran out for audits on certain items. So it's a mix. Good operational performance, much lower acquisition charges compared to the prior year, and a helpful tax item.
Got it. So underlying performance plus some significant year-over-year differences in charges and taxes. What about cash flow? Did that look healthy?
Very healthy. Net cash from operating activities was $17.1 billion in 2024. That's a huge jump from the previous year, too, reflecting that improved net income and strong underlying business performance. Shows they're generating a lot of cash from their core operations.
And the balance sheet. Looked like equity increased quite a bit.
It did. Total stockholders' equity rose to $46.4 billion at the end of 2024, up from about $37.6 billion the year before. Part of that reflects the retained earnings, of course. You do see significant amounts of goodwill and other intangible assets on the balance sheet from past acquisitions, including that in-process R&D or IP R&D. They have to test those regularly to make sure their value hasn't been impaired.
Okay, so financials look strong overall, especially cash flow, despite the future pressures. How are they using that strength to reward shareholders?
They're clearly focused on returning value. Dividends are a key part of that. In November 2024, the board increased the quarterly dividend again, up to $2.81 per share for the first quarter of 2025.
And how much did they pay out in total?
In 2024, they returned $7.8 billion to shareholders just through dividends. That's a substantial amount.
And share buybacks, are they doing those too?
Yes, they are. They repurchased $1.3 billion worth of their stock in 2024, which is about 11 million shares. And then, just in January 2025, the board authorized a new share repurchase program for up to an additional $10 billion.
10 billion. That's a pretty strong signal of confidence, isn't it?
It really is, especially since they still had $2.4 billion remaining under a previous authorization at the end of 2024. So they have significant firepower for buybacks going forward. It's a clear commitment to enhancing shareholder value alongside the dividend.
Okay, so summing it all up, strong current performance, a clear strategy, but also some very real challenges ahead. What's the overall assessment? How do we see Merck's trajectory?
Well, Merck is undeniably a global healthcare powerhouse. You see the robust performance driven by key products like Keytruda, successful new launches, and a strategic R&D approach that includes bringing in external innovation. And as we just discussed, they are actively returning significant value to shareholders, which suggests management confidence.
But those headwinds are significant.
They absolutely are. You've got the intense competition, the constantly shifting regulatory environment, especially the IRA pricing impact looming over Keytruda and Januvia, and those complex market dynamics, particularly in China. These aren't small issues.
And the internal restructuring shows they're actively trying to get leaner and more efficient to face that future.
Exactly. Their ability to navigate those external pressures while executing internally on things like the manufacturing optimization and, crucially, keeping the R&D pipeline productive,
Cool.
that combination will be key to sustaining growth.
The new product approvals like Winrevair and Capvaxive are positive signs, obviously, and the continued expansion of Keytruda for now.
Right. Those successes show the innovation engine is still running. Continued investment in R&D, smart collaborations, those remain absolutely vital for the long term. But it's definitely a balancing act between managing those significant external pressures and fostering that next wave of discovery.
It really paints a picture of this constant tension, doesn't it, between groundbreaking science, the need to find cures and treatments, and then the harsh realities of market competition, patent fights, government cost controls. So maybe a final thought for you, the listener, to consider. How does a global health giant like Merck balance that fundamental mission, innovating for patients, with the very real financial pressures to deliver shareholder returns? And how do they navigate this increasingly complex web of global politics and regulations? What stands out to you about how companies manage these really diverse, often conflicting demands?